Hi, I thought I'd make this quick video just to explain why I'm creating these videos on this YouTube channel and just show you some proof of the accounts that I have and how I got them to well over £300,000. Welcome to Destination Wealth. The reason I've made this YouTube channel is because when I was starting out in investing and getting interested in investing in stocks and shares, and I opened up a SIP because I wanted to invest myself and do my own research rather than relying on the small amount of funds that was available in the Friends Provident pension that I had. I struggled to find anyone online that I could relate to, and anyone who, wasn't a multi-millionaire but was growing nicely and doing it themselves with a regular job. So I'd like to just go back to when I first started and explain how I started, what changed, the sort of things I was looking at. I first started not really investing, but putting money away into a pension about 20 years ago. So when I was 30 was when the job I had at the time offered a company pension scheme. I opened it up, it was the first one I'd had. I started paying in about £28-30 a month for quite a few years. And I think it was Friends Provident or someone like that. I didn't know anything about it. I just thought, yeah, maybe it's something I should do. So I just put the money in every month and forgot about it. Now, what I did do is every time I got a pay rise, I increased it by 10%, or I increased it. Some months I paid in a bit less, some months I paid in more, but I just kept doing it, and it came out by direct debit, or it came out my salary from my pay slip actually. So I never really saw it. It wasn't like it was money that was coming out of my pocket. If you don't see it coming out, you soon get used to it, and it's automated. So that's the best way to do it. Carried on paying that in, and then it wasn't until probably about 7 years later that I think I stumbled, or I watched some documentaries about trading, and then got into watching films like Wall Street. I found out about Warren Buffett, read some books by Peter Lynch and The Naked Trader, and I really got interested in it, and I started to really consume as much information as I could about it. So for about 7 years I just carried on paying into that company pension. And then I transferred it all across to a SIP, and I also started up a stocks and shares ISA. Now, I was buying all sorts of books, things like penny shares, and you'd read these stories about how people had put, a few £1,000s into a penny share, and next week they're a millionaire. And I thought, wow, that's amazing. You can, and it does happen, but the chances of it happen, you've got much more chance of losing everything. But I still chased that rainbow, and it didn't work out very well. I did lose a lot of money. I made a bit, but I didn't know what I was doing. I was just throwing money all over the place into things that I thought were amazing without really doing the research as to how good those companies were. But as my research developed and my interest in really drilling down and looking at how these people who make good money over a long period of time, I stumbled across people like Peter Lynch and Warren Buffett and their investment philosophies of buying good companies at reasonable prices that pay dividends and reinvesting those dividends. And it really struck a chord with me. So I started consuming more and more information on it, and I've transformed my whole investing approach into that sort of philosophy of reinvesting, buying dividend-paying stocks, and just reinvesting those dividends to buy more stock, give me more dividends. And it's worked out pretty well. So it took me, I think 14 years to get from £1,000 up to £100,000. But by that point, I'd really started drilling down and investing properly, doing the research, looking into company reports, just following what amazing investors like Warren Buffett and Peter Lynch and The Naked Trader, guys like that were doing. And I really enjoyed it. Those first 14 years it took me to get to £100,000. Following on from that, it only took me another 4 years to reach the next £100,000. Here's the performance of all my investments over that 12-year period, 2011 to 2022. So my SIP, my Friends Provident Company pension, my ISA, and a small amount of crypto. In 2011, my total savings were 29,653, and that grew up to £267,000 2022. You can see there that 2017 was a great year. I invested a total of £12,486 of my own hard-earned cash, and I had a 27% increase in growth. And that was excluding that 12,486 of contributions. So £20,000 was just the increases of the dividends and the capital appreciation for the year. It took me 7 years to reach that all-important £100,000 milestone from the £29,000 back in 2011. But then it only took me another 4 years to hit just shy of £250,000 in 2022. My average growth rate from 2017 through 2019 was a nice steady rate of 15% per year, excluding contributions. That was just capital appreciation, the stock price increases, and the dividend income. It flatlined between 2019 and 2020 due to various macroeconomic reasons. But then I had a massive jump in 2021 of 40%, excluding my own contributions again. That was a monetary gain of £67,000 in just 1 year. From when I started investing right up to 2022, I had an average compounding gain of 14% a year. That's not including any contributions that I've made in that time. It just grew exponentially. Going back to why I'm making this is because I wanted to be of help to people who are in that same sort of boat. They're starting off, or they've maybe got 10, 20, 30,000 pounds. They're thinking this is taking forever. I'm never going to get to the point where I've got 100,000 pounds, 200,000, but you just got to stick with it. It just seems so slow in the beginning because all you're doing is paying in money, and that tends to be what's growing. Yeah, you're getting a bit of interest and a bit of increase each year, but it's on such a small amount, it's not noticeable. But you just keep ploughing away. Once you get to a point where you're near £100,000, that 10% you might make in that year is significant. And then don't forget that £10,000 you make the following year, you get 10% on that £10,000 as well as the £100,000 you've got in there. So it just snowballs and grows and grows and grows. And it's amazing how you can take so long to get to 100,000, and then to get to the next 200,000 is a third of the time, a fourth of the time it took you to do that first 100,000. Each consecutive £100,000 after that is shorter and shorter and shorter. It took me, as I say, 14 years, I think it was, to get to 100,000. Only 4 years to get to 200. Well, it's actually about 250,000 that I got to in under that time. And then 3 years to get to 300. Each time, that £100,000 getting closer and closer. I'm not paying in any more than I was 5 years ago. I pay in around £1,000 a month. Some months I don't pay any in. Some months I pay a little bit more. You know, it's got to the point where now the increases and the dividends I get in are far outweighing what I can possibly pay in from my salary. None of this is investment advice. It's just my personal story. If you're thinking of investing, do your research, speak to a professional. Don't just throw your money in like I did. I lost a lot. I did make some, but I could have probably made a lot more if I hadn't made those silly mistakes in the beginning. Subscribe to the channel if you want to see how I'm growing and the investments I'm making, how much dividends I'm getting paid each month and each year. And hopefully it relates to your own story. If you want to see the stocks I owned and how I earned over £1,000 in just 1 month in dividend payments, completely passive, check out this video next. Thanks, guys.